All right, thank you everyone for carving some time out of your day today to come and learn about the riveting topic of corporate treasury. It's super exciting. Hopefully we'll make this interesting and interactive and not bore you. And I realize I'm standing between you and a great party this evening. So thank you for being here. So this particular session is on how we use Tableau, or how we think about using Tableau and how we use Tableau in our corporate treasury function. So I'll just give you a little bit of background about myself. My name is Ed Berry. I'm the Director of Treasury for Tableau. I've been with the company for about 2 years, but I've been in corporate treasury for about 15 years. So I started out in corporate treasury at Microsoft, learned a ton there. It was a fantastic time. I then went to another global company called Itron, which you may not have heard of, but you may have an Itron smart meter on the side of your house. So they're a global leader in smart grid technology, and really learned an incredible amount about foreign exchange there. So go on to the next slide. What you'll see about me is I have 3 daughters. So what that means is I'll be working forever. I'll never be able to retire. I've come to grips with that, so I don't need to stress out over that. And the most important thing about that is that I want to make sure I'm working for a company that I really enjoy. And I found that in Tableau. Tableau is an incredible organization to work for. They're mission-driven. It is the most collaborative company I've ever had the pleasure to be part of. So I really appreciate that. And I can enjoy working for many, many years to get my girls off through college and beyond. So a couple of other items here. We got a few upcoming sessions that are somewhat relevant to the corporate treasury and finance space, especially around forecasting, dashboards, and then how some different financial institutions like Banco Itaú from Brazil, how they use Tableau and to manage their function. So I do want to caveat a few things here before I get too far into this. I do appreciate questions, so please feel free to ask questions. I find the most great successful sessions are the ones that are most interactive, where there's a lot of Q&A and dialogue. There's no other sessions after this in this room. I'm happy to stay around and answer any questions that anybody has. The second thing is I'm actually not going to be showing you a whole lot of dashboards. And the reason for that is I could probably learn much more from you and how you've constructed dashboards and visualizations and analytics than what you can learn from me. So I'm still relatively new to using Tableau. And so I wouldn't want to disappoint you with how I look at data sometimes, because I'm still thinking in kind of legacy tabular data format, and which is how I grew up in the corporate world on Excel, and in moving to data-driven analytics has been really, really fun. So not going to be a whole lot of focus on that, but really what I want to do is get you to think about some things about how Tableau can be leveraged across corporate treasury, across your organization for cash management, investments, or foreign exchange, and then we'll talk about a few other items. So what is Treasury? So I really describe Treasury as the central bank of an organization. So every dollar that flows in or out of Tableau goes through our team's hands. And so we're a global treasury team of 2, myself and my colleague Kelly, who's in the audience with us today. And so we manage a number of different functions for Tableau. We also help Tableau grow by making sure that we have the financial transaction infrastructure that the business groups and the company needs. And so we'll get into that a little bit more here. So what do Kelly and I do? So we really manage all of our banking relationships around the world, banking services, bank accounts, liquidity structures. We're responsible for payment processing and payment optimization, so how we pay our suppliers and our vendors and our employees, which is very important. How we collect from customers, so how those collections come in. Do we have the right infrastructure in place, and how do we drive automation and scalability around that? Liquidity management, cash forecasting, and funding of our subsidiaries. So Tableau has subsidiaries in a number of different countries around the world. Canada, Ireland, UK, France, Germany, Singapore, China, Australia, and a few other countries. So that's a lot of different geographies to be working with and currencies. So we also manage our investments, so how we invest our excess cash and manage that. Foreign exchange, so how we manage and mitigate foreign exchange, how we understand what our risks look like or not, and our exposures specifically, and how we think about that. E-commerce, so as Tableau takes a lot of payments via card-based products, so that falls into our scope. We also oversee our Tableau share repurchase program, and we work with data, a lot of data from a lot of different sources, and we get a lot of questions. And sometimes it takes a while to work through the data to be able to answer the questions that are coming from our senior management team and others across our organization. So data is the lifeblood for us. So our agenda today will be talking about cash management, a little bit about how we've removed friction in getting data for analytics for our users. We'll talk a little bit about investments, how we monitor our investments and ensure compliance with our investment policy, which is a key control, key item for Tableau for any public corporation or anybody dealing with investments. Foreign exchange, so how we use Tableau to better identify our risks and understand them. We'll talk about some Treasury trends to watch, and what you'll notice on the common theme of that is data, a lot of different aspects touching data. Key messages, lessons learned, and then some Q&A. So we'll keep moving through. So we'll talk about cash management first. So this is a little schematic. Sorry, it's a little not quite formatted for a presentation here. But the point is, we're dealing with a lot of data coming in from our banking partners around the world through a number of different connectivity channels. We have data coming in from e-commerce providers and processors, data coming in from our corporate card program, so our employees that have T&E cards or purchasing cards. We have data coming in or using related to our foreign exchange. And so we're always trying to get more data from our banking partners. How do we get more data pushed to us so that we have it for both analytics, reconciliation, straight through processing? So you'll notice that we have a number of different connectivities that we use out there. One of them is the SWIFT financial messaging network. So that's our preference to communicate with our banking partners over that channel. And the reason for that is we want to avoid building point-to-point connectivity, and we want to have one way to communicate with any potential banking partner around the world, wherever we want to operate or do business in. So we have a lot of data coming in and a lot of different systems that are being touched. So we have our ERP system. We have what we call our financial master, which is our data warehouse. We have a lot of different data going into financial master, including our bank statements, bank accounts, and other data activity. We have our expense management system, which is an application called Concur. We have a purchase order management and invoice processing system called Coupa, and all those integrate with our ERP system. And then there's data that flows from our ERP out to an accounting and reconciliation platform called Blackline. So the point of this slide here is that there's a lot of different data elements, a lot of different data flows moving around. The one thing we don't have is a treasury management system. And so that's on our roadmap to look at implementing a future treasury management system. And I'll talk a little bit about why that's interesting and unique as we think about it at Tableau. So about a year ago, our finance analytics team built a process to ingest our end-of-day bank statements that we get in from our banking partners. They come in a legacy format. It's actually nearly a 30-year-old format, believe it or not, called a BAI2. What that stands for, I don't really know, but it's a legacy format that has been around for many, many years. And the thing I would note on that is it's very limited in content of data, richness and fidelity of data. But nonetheless, we get that data coming in, and we load it into our warehouse. and we can see, we can build a single cash position. So we have visibility to nearly 100% of our cash balances and transactions on a daily basis. Those statements come in over SWIFT or FTP from a couple of banking partners. And the thing we're working on now with our finance analytics team is building a process to migrate, instead of using the legacy BAI2 format, to the current generation XML format based on what's called ISO 20022. It's a financial industry format, and it's based on the XML schema. But the real relevant aspect of using this particular format is much more richness of data. We want to know everything about a transaction. We want to know all the attributes of different balance types across our bank accounts. We want our users to be able to quickly query and find transactions that are relevant to them. And so we're working on that, building that support, and then be migrating off over the months and quarters ahead from the legacy BAI to the XML. So we actually import our statements 2 times per day into our data warehouse, and that was built using Alteryx, and that goes into an AWS Redshift database, which really acts as the central source of truth for all of our bank account balances and transactions, and gives Kelly and I that daily cash position view that we need. It also helps us reduce our usage of banking portals. So imagine, as we talked about, the number of locations that we have Tableau subsidiaries in and different bank accounts in different countries and users across the company. We're trying to reduce the usage of bank portals and get everybody using this particular data source so that they're operating off of one source of truth, and it reduces the administrative overhead of managing all those user logins. So that's important to us. So this is an example of a dashboard where we're just taking all the data that's come in and trying to really distill up for management what cash flows look like in aggregate dollar terms, but also being able to distill that down or break it down into any view that any constituency within Tableau needs. What are our balances by currency, by country, by geography? What are the flows? And then being able to filter out certain transactions which might gross up the number. So as an example, if you've worked in the banking world and are familiar with sweep structures and ZBA structures, those tend to gross up your cash flows, but they have no net impact. So we're just filter things like that out. And then coming down to what was the amount of credits and debits across all those transactions, and then what's the net cash flow. So that's an example of a high-level dashboard that we would publish to our management team. And then really understanding, one of the things that's important as you look at this is understanding the different constituencies. So our CFO and Senior Vice President of Finance are very interested in the summary data. What does that look like? We have other groups that want to look at what does that data look like on a legal entity level or a currency level or a banking partner level. So being able to drive into that. This is another view of looking at that data in more of a waterfall format, and then being able to kind of have the ability to look for something that is an outlier, drill into that, and drill down into the underlying bank accounts and ultimately transaction activity that's occurring for a specific date or week or time frame. So just kind of some of this stuff we built isn't necessarily used all the time or daily, but it's just interesting ways to look at data. This would be looking at our balances in more of a kind of heat map form, but really looking at, not balances, the transactions. And so looking at, going back to the BAI statements, every transaction has a numeric BAI code with a definition around that. And so just for a given time period or an individual bank account or all accounts, a given date or date range, what was the number and value of those transactions, and understanding that. Being able to highlight one of those cells and then drilling down to say, in this case, the lower pane here is for BAI transaction code 142, what's all the transactions underneath of that, and then being able to drill into those as needed. So this is another little view that we have here where we allow users through this dashboard to be able to query across all of the transactions by inputting just a specific text string. This is actually really important because the ability to find a transaction across thousands or tens of thousands or even hundreds of thousands of transactions in a given year, because we may make a payment out to an organization. For whatever reason, it might come back, be a return payment coming back into us. And so we may not have the full transaction narrative around what that return was, but there might be a reference code that we can look up that's unique, and then we can find what the originating transaction was and what the return was and understand that. A lot of times customers, this is very true internationally, are paying us through different payment channels like wires. They may give us a reference data element like their initiating bank transaction reference number. They may send that to us in an email, and the ability to then put that in and query across all of our transactions to find that one that's relevant to that from that customer is really a big time saver for us and our team. And because believe it or not, in the international banking world, and even in the domestic world, a lot of data around a payment is truncated or dropped off. And so that can create a lot of pain points in understanding what is the nature around a transaction. So being able to do that is quite helpful. This is a little bit different view, again, somewhat just looking at transaction counts across bank accounts, and really trying to identify accounts that have low activity or no activity. So maybe there's an opportunity to streamline your banking and reduce accounts or close accounts that are idle. The one thing that we also think about too in this space is that the more accounts you have open across your organization, the more potential there is for fraud. So to the extent you can understand truly what your bank account needs look like and are, and reduce the usage of unneeded accounts, lowers your potential for fraud. So it's an important way to think about these things. So we'll talk a little bit now about what's next for us. So really supporting multiple different data sources for forecasting. And so I would just say for cash flow forecasting, I'm not familiar, I don't know any CFO or treasurer in the world that's happy with their forecast and says that we have the best cash flow forecasting out there. So there's always room for improvement. And the improvement goes back to having access to the data, and that data can exist in multiple source systems and trying to bring it all together. And so thinking about how do we take our bank statement balances, pull through our pending AP invoices from our ERP system, our AP invoices that haven't synced from Coupa to NetSuite yet, our AR by invoice, our cash flows related to our investment portfolio, cash flows from our e-commerce system, so customers that are paying us through card-based transactions, those create settlements nearly daily, so pulling that data stream in. Our corporate card cash flows, so those have certain settlement cycles, projecting that to when those flows are going to happen. Payroll-related data, tax data, ultimately purchase orders and sales orders. I mean, all these things go into a really good, robust cash flow forecast. So the more information that we can get at a granular level, the better our forecasting will be. And so I actually want to stop on this for just a second and relate it back to the earlier schematic slide where I talked about a treasury management system. I've implemented a number of systems in prior roles, and the most challenging aspect of it and most expensive aspect of it is building data interfaces to a treasury management system. And so what happens is you spend a lot of time and effort trying to capture all this data from these source systems to shoehorn it into a treasury management system that may have a limited data model. And what that means is I'm never quite happy with the capability I have, because I always have, as I'm working with the data, I have, well, what about this question? What about this question? And because I want to work with a data set this wide, yet I can only fit this amount in to support a certain cash flow forecasting framework, means everything else got dropped off along the way. And so what I struggle with personally is how do we meet all of our needs for managing treasury and cash flow forecasting, and should we rethink the paradigm where we're actually really using Tableau and using a treasury management system as another data input back into our forecasting capability where we're doing everything in Tableau. And so I think that ultimately gives us the most flexibility to work with all this underlying source data versus spending a lot of time and energy building interfaces that quickly become frustrating. So any questions on that or any comments? Yes, sir.
So in regards to sales, purchase and sales, when you look at an order to cash review in any process, how would you go about analyzing credit memos and price overrides? Like what are some standard indicators as for price overrides?
Sure, that's a great question. The one thing that we look at is credit memos. So how many do we have outstanding and at what legal entity? And when do we think that will be applied? So just trying to understand what that looks like in aggregate and then really making a determination, is it material or not? Generally, it's not in our case, but looking at that perspective, I think where you're going with the price overrides might be a little bit more oriented in the kind of working capital metrics a little bit. And so that would really come out of our sales order system and seeing how that, what's happening in terms of price overrides and what that looks like. And so that is not something that Treasury would look at, but really our FP&A group would look at or our sales groups would look at. That doesn't necessarily affect us from a cash forecasting perspective. So I don't know if that answers the question. Yes, that's one of the tools we use. Yep. Any other questions? Yes, sir.
Do you see from any banks their willingness of sharing data and how does that collaboration look? Have you seen some really good examples of banks providing insights and data to use the Treasury function?
Sure, that's actually a great question. So one of the things I get to do in my role at Tableau. Oh, yeah, so the question was, what are banks doing to share data, enrich the data that they have, that they're providing to customers? I think that's the gist of your question. So a couple of things. Most of them support all the formats that are out there. Legacy Swift formats, legacy BAI, XML. Some now are doing information reporting through APIs and JSON. We provide a lot of feedback to our banking partners. So one of the things I get to do in my role is work with our banking partners and give them very specific use cases on why we want this data. We will actually do kind of what I would call forensic write-ups, where we'll go through and look at transaction level detail that's maybe visible in their banking portal, their online banking portal, versus what they're giving us to us in file format. And we will also include data that we know that they have in their systems that they're not exposing or not able to expose in the file feeds that are coming to us or in their online banking portal, and show them where it needs to be mapped in, say, the XML format standard. Because we're trying to get that fidelity of data. So maybe I'll turn that question a little bit. So think about if you do a transaction in a currency other than the bank account currency. So there's an embedded FX spot transaction that happens there. And what happens is almost every bank in the world, and this is because it's legacy, and you have to go and think about how some of these systems were built over the last 30 years, that information related to the transaction currency code, the transaction currency amount, and the FX spot rate is usually embedded in the narrative of the transaction. If you're using the XML formats, you can actually input that and map that data into 3 different distinct fields. If you get that data, then you can actually do straight-through processing in your ERP system and have your ERP system calculate realized gain loss. So I realize I'm getting into kind of technical accounting here. But what we actually did, we did a workflow study at my prior company to look at those transactions that fell into that criteria. When you have to manually reconcile a transaction, it took 20 minutes of human time. So if you think about an organization that has thousands of those transactions, huge cost. And if you can just get 3 key data elements and pass that in the bank statement into your ERP, you can save a huge amount of time right there. So those are the things that we communicate to our banks. That's a long-winded answer, but I wanted to give that specific use case because it's near and dear to my heart. It's something I talk about all the time because it's important not only for reconciliation, but really understanding, again, where your foreign exchange exposures are coming from and what those look like. Any other questions? Okay. So we'll talk a little bit about investment management. So one of the things that Kelly and I are responsible for is getting all of our excess cash into investment vehicles that yield a little bit better rate of return for Tableau. And so this is really a schematic to showing how data flows throughout the different systems and providers that we work with. So we're working with investment advisors, broker-dealers. Transactions are occurring. We have a custodian bank. The custodian bank's feeding data to a third-party investment accounting service that we use. The custodian bank is sourcing data from other third parties, so getting market data from, say, Bloomberg or Reuters or credit ratings. The external investment accounting service that we use is also sourcing data from third parties. Some of it's the same third parties, other sources, all in an effort to drive accounting, valuation, and compliance. That all then feeds, we use that to support then our month-end journal entries going into our ERP system. Those journal entries and balances feed down into our financial master. What we also do is take daily data feeds from the third-party accounting service provider, all of our holdings that we have, up to 500 fields of data. So it's an enormous flat file, but it's not very big. It's just a lot of columns. And we pull that down into our financial master. We do similar feeds coming in from the custodian bank. And then tonight, we actually have going live a feed from the custodian bank to Bloomberg so that we can then leverage a service that they have called Portfolio and Risk Analytics. So being able to then aggregate all those different elements, data elements from those different providers, and then layer in our own additional analytics that we have on top of that. So we're not trying to replace anybody. We're actually trying to make it all the data better and more valuable to us in terms of being able to take the best data elements across any of those providers and build the analytics that we need from either a specific as-of date or over a time series. And what really gets interesting in this is when you think about our data warehouse down there, how do we then take our investment data and combine it with our bank statement data, combine it with our AR data to really get a 360 view of our exposures, our financial exposures, whether it's to a specific issuer, a country, a currency, geography, a market sector. So we want to be able to have those views. So when you come back next year to Tableau Conference, we'll have a lot more to talk about on that front. So that's something that Mike and I will be working on. Mike Crook leads our finance analytics team, and they do exceptional work for us. Sir?
You know those sources, I was wondering, does your team with the data quality review? I mean, I can only imagine all the reviews that you have to link all these sources.
That's correct. So you're stealing one of my slides that's coming up here. So it's a great question. I love that, and I'm going to show you how we do that and answer that for you in about 3 slides. So hold tight. Any other questions at the moment? Okay. So again, just thinking about risks. And so these are really dumbed down dashboards, but thinking about just how we measure, monitor risks in terms of market sector, security type, industry sector. And really, the important thing here is tying it back to one of the items I mentioned early on was our investment policy, and taking that investment policy and then making sure we're in compliance, not for just a specific date, but over a time horizon. So we can say for the whole quarter, we were in compliance, or on this day, we may have had something that fell out of compliance, which actually has never happened, thankfully. But being able to take our investment policy, which is its own living kind of document approved by our board, and then being able to tie that into the investments that we have and measure if there's anything that's outside of the bands of our policy. So that flexible architecture lets us bring in the data that we need. So just some other views, thinking about how we look at things somewhat related to our policy. So currency exposure, country of headquarters of the issuer, asset class. And that's all data that's coming in from third parties, some of them that we had mentioned in those earlier slides there. And then thinking about maybe exposures, look from a heat map perspective, and being able to pull data elements through by using the labels in Tableau, labels capability, and to show relative impact or value, say for an average yield. And so looking at it top level, maybe issuer as an example, or industry group. So now back to the question that you had, which is how do we look about automating that? So we have two different data sets coming in, actually soon to be three, and being able to blend those together in an automated way. And we actually then have a number of different alerting, or I'd say that before even alerting, what we look at to show differences. So number of shares or units, price differences, both in absolute and percentage terms, market value, credit ratings differentials between one provider and another provider. And this runs every day, these set of alerts around that, and it will send an email to us automatically if anything falls outside of that on the most recent date basis. But we have the ability to go back and look at this over a time horizon and say, for the quarter, how many issues did we have? So a good example of this is if you're managing an investment portfolio, your auditors will say, well, how does the valuation from this provider compare to the valuation from this provider? And then what's your sample selection? Do you select 10% of your holdings, 20%? And so our view is we just do everything. We look at all holdings because it's automated. And we don't have to sit and say, oh, what's the right appropriate sample size? We can do it, all of our holdings across the whole date range time series.
Is Tableau handling the alerts or is Tableau?
Pardon me?
Which tool is handling the alerts? Is Tableau doing it or is Tableau?
So in our case, our external accounting service provider will provide alerting, but we do it ourselves through Tableau. Yep. So we will get an email from them in the morning if anything fell out of that, but we do an additional reconciliation and have alerting using Tableau. So we, again, can go kind of above and beyond what an existing service provider has the capability of doing or may not have the capability to do. We can enhance that, and so to meet our needs. Yes, sir.
What do your auditors say when you tell them you do that?
This is an operational control. It's not a financial or SOX control. So yeah, that has a different scope and meaning in the auditing world. So this is for us an operational control. Any other questions? So we'll get into foreign exchange. So what's the biggest challenge in managing foreign exchange at every organization? Does anybody have a guess? Was there rates? Not rates. Hedging or derivatives? I would say no, it's not that. You got it. Exposure. It's all about the data, right? So the best hedging strategy in the world is of no value or could be negative value to you if you don't have your exposures absolutely known and quantified and truly understand them. And exposures all go back to data. And really, it's transaction level data. And so you have to always think in terms of corporate. When I think about foreign exchange, I think about it from a corporate perspective. And it's transactional level data, generally sourced from your ERP systems, your balance sheet or your income statement. So it's all about transaction currency. You can change your views and talk about things in dollar terms or a common currency amount. But at the end of the day, true foreign exchange management is all about transaction currency versus either functional currency of a subsidiary or back to the dollar if you're a dollar-based reporting entity and what the economics are of it. So I think that, so that's how I think about it, how we're oriented to it. So most of that data is found in your, as I said, in your ERP system, general ledger, but it's also important to understand other sources of foreign exchange exposure. So think about your corporate card programs, where your corporate cards that you're having your bank partner issue to your employees are denominated in a certain currency. In our case, it's US dollars. If we have a lot of employees that are traveling internationally, there can be a lot of FX transactions happening there. So we want to understand, is it material to us? What's the materiality of it? Maybe it's not material. Maybe we don't need to think about it. Or maybe it's continuing to grow over time, and now it's something that we actually need to take into consideration and maybe think about issuing cards denominated in different currencies to support that and reduce those FX exposures. Same thing on the e-commerce side. You may be working with a provider to process your card transactions from customers, but if that customer's card is in a different currency, then there's a conversion going on. So it's really important to look through and understand the underlying sources there. So how do we use Tableau to manage FX? So we actually reach through all of our data that's in NetSuite, our ERP system, is replicated to our financial master data warehouse. So we actually use Tableau against that to understand what our non-functional exposure is for each entity at the transaction currency level on both balance sheet and income statement, and then be able to look at that in different dimensions. So whether it's over a time horizon or as of a specific last month end, this month end, what's the change in exposure, account type, currency pair, et cetera. It also helps us when we're actually drilling down through that and looking at our underlying AP and AR invoices by legal entity, currency, and due date. So not only does that give us a view of the foreign exchange exposure, but also taking that into cash flow forecasting. So trying to align those two together and meet multiple uses there of that data set. And being able to use and leverage the data from an AR perspective. If we're billing in a certain currency and we know we have outflows related to that, we can better plan for that from a funding perspective as well as an exposure perspective. We also look and query all of the journal entries that are being posted to our FX gain loss accounts. We haven't had this issue at Tableau, but other organizations I've been involved with, the FX gain loss accounts tend to be what I would call dumping grounds for a lot of other transactions that, for whatever reason, aren't being appropriately booked into other entries. So if I can't figure out where to book it, let's just put it in FX. And that's, thankfully, we don't have that issue here, but that's just something we want to look at and understand and make sure that it's correct. We think about scenario modeling, so being able to pull our exposures, our prior month-end accounting rates, balance sheet rates, and then current rates, say from Bloomberg, and then do an estimated gain loss, so that from a revaluation perspective. And then collaborating with financial institutions. So we like to been showing a number of banking partners how we actually use Tableau to reach into our ERP system to pull that data out, that exposure data, and how they can think about advising their clients for that. And then being able to share that data, those Tableau workbooks that contain that exposure data, with the FX advisory groups at financial institutions so you can have a better dialogue. Because when we talk to those foreign exchange advisors at the different banks, they all go back to that first bullet point that I raised, which is it's all about the data. So you have to understand and validate that that exposure data is correct.
So for the scenario modeling, it sounds like you import, like you don't do any of the modeling in Tableau or LMX or anything like that, right?
So
Or taking it from your provider, be it that Bloomberg or something like that, and more using Tableau for reporting.
reporting, yeah. Well, we can do the math in Tableau. So we can say, here's our exposure, where we're at. Here's the prior month end balance sheet rate. Here's the current rates that we've snapped from Bloomberg, and then come up with an estimated gain loss or revaluation impact. Yeah, we can do that in Tableau. Yes, sir.
For the journal entries, what are you looking for? Is it transaction types? Or
Yeah, transaction types. You make sure that, and some of this is a function of NetSuite versus other ERPs that I've seen and worked with. So what you should see in your unrealized gain loss account is only revaluation entries, which are reversing entries. You shouldn't see a manual posting there. So those are just things that I think about. We haven't had those issues here, but I think about it because I've seen this in past lives or past experiences. So we're just trying to get ahead of the curve and think about that. So what's next for FX management for us? So snapshotting our balance sheet on a weekly schedule. And the reason for that is to be able to look at change in balances week over week. Most ERP systems, when you actually look at the balance sheet, it's usually you're looking at balances as of a specific month end. They won't necessarily track the balance sheet balance as of Wednesday the 13th of the month. So it's hard to kind of recreate that unless you go back to the underlying transaction detail starting at inception and then do a calculated running balance by day, which becomes really hard to do that. It's kind of an intensive calculation. So what we're looking at is being able to just kind of snap those balances on a weekly basis, and then we can then make it easier to look at week-to-week changes. Being able to then blend or tie together forecast items, so forecast adjustments. So if we know certain transactions are going to come onto the books that haven't yet been posted in the ERP system, how can we track those and combine those with the actuals to get a forecasted exposure set? So those forecast adjustments are key. Additional data integrity checks. So again, talking about past experiences, what I would call shadow balances. So that's in your GL. If you have a balance that came on your GL in a transaction currency, but was cleared in functional currency, this transaction currency balance will sit out there and revalue monthly. And so that's an example of a shadow balance. So we just think about things that I've seen at other organizations and how we can get a head start on that. Inverted balances for account types, so seeing a positive balance in a payables account, negative balance in an asset account, just things like that. Idle balances, where balances haven't changed for a certain number of days or months, that could indicate some things there. So just how we think about that. Forecast versus actual comparison, and then FX gain-loss analytics. So really, how do we take our total company gain-loss and then break it down into its component parts by legal entity, currency pair, and then the drivers of those loss. How much came from rate differentials, transactions posted at a rate other than the P&L rate, or other types of impacts. So some Treasury trends to watch here. APIs. So nearly every bank in the world is focused on exposing their systems and their data through APIs. And initially that's focused really on I think right now tends to be more oriented on transactions, ACH payments, wire payments, but they will go into information reporting. Most of them are doing it or thinking about it in either an XML or JSON format perspective. But Tableau, with our web data connector, you can build those connections in Tableau to those APIs. So just think about what other potential processes are out there that could be done through APIs like account opening or account maintenance. There's a lot of changes going on in the payment systems world. So payments and the use of, I mentioned ISO 20022 XML formats. That was, when I first brought it up at the beginning of the presentation, was focused on the statement reporting. But we also use it for all of our outbound payments. And again, it's using XML to deliver a bigger data payload with each payment that's going out, and then being able to use that for analytics. And that use of XML is happening now in Canada, and the US has signaled that it'll happen in a few more years. But I think that's all great because it's just causing more data to go along with every transaction. Not only can it be used, that data, to support straight-through processing and reconciliation, but another primary driver is around compliance and anti-money laundering. So the more data elements that you have, that you're populating in those payment messages, the more seamless those payments will move through the payment systems, and the easier it'll be to reconcile as they come back on your statements. A lot of this, too, over in Europe, there's a regulatory framework over there called PSD2, or Payment Services Directive 2, which is forcing banks to create APIs to move to an open banking model. So again, that means more data and more interfaces out there. And then, of course, I'd be remiss in not mentioning blockchain or distributed ledger technology. So it'll be interesting to see how that develops over the years ahead, and seeing what. And ultimately, you have to have a data payload to go into a blockchain construct. What does that payload look like, and what's the richness of that data? So again, huge focus on security, compliance, regulatory changes, fraud prevention. And it's all about going back to data. That's the common theme of all of these things is data. And so, that growing data payload in payments or other activity that's going on, thinking about how we take our master data, so our supplier master, and bump that up against different regulatory filters that are out there, and comparing to just make sure that we don't have something that's going to get hung up in a payment review cycle. And then big data and analytics. So just, every day I deal with more and more data, trying to think through what's hidden in our data. What do I want to know? An example of this is really going back to the corporate card side of things. So our corporate cards that our employees have, those transactions feed into our expense management system called Concur, which does its function. It's all about expense management. But you think about those transactions, and Concur needs kind of 12 or 15 data fields per transaction. But when you go back to the provider, which can be in this case MasterCard is the ultimate provider of the cards, they can actually provide a file that contains up to 800 fields of data. Most of it's null or blank because the merchant isn't populating it, but there's some rich data elements that are available there that you can do very interesting analytics. So as an example, if our tax group said, how much did we spend across our P cards last year at Starbucks? That's actually a hard question to answer, right? But if you had that data set coming in, which we actually have it, and we're building that into our data warehouse, we could answer that question. Or our tax group can say, what were our expenses? How much did we pay in taxes at a certain zip code or state or city? Those are all elements that are in that don't go into Concur because Concur doesn't need it. And it's not a knock on Concur at all. It's got its function for reconciliation on the expense management side. But when we think about the transactional nature of all that data and what you can do on different views of that data, it becomes really interesting. So that's an example of how I think about big data. We touched on what's hidden earlier about the embedded FX spot transactions and bank statements. There's other rich data that's out there. So thinking about some key messages, I think about Tableau as being a platform. So just really being able to use it to leverage Tableau to join multiple data sources together, systems, data elements, and allow us to iterate through and look at data in unique ways. And I mentioned this earlier. I struggle with the fact of trying to build interfaces in the historical context of feeding data from one system to another when I can just have Tableau on top reaching into all of them or many of them underneath. I also think about Tableau as supporting flexible workflows. So a lot of legacy systems are oriented into fixed workflows and static reporting, and really thinking how we leverage Tableau for flexible workflows and user-driven analytics. So that's a key item for us. And again, my view is that transactional level data is key. And I know that's can be really hard in some systems to get transaction level data out, but that's a really key aspect of it, whether it's foreign exchange management, looking at journal entries, or other elements. It all goes back to transactions. And what I always talk about is being able to look through a transaction and understand its touch points from either a cash flow perspective, a foreign exchange exposure perspective, an accounting perspective. And that ability to look through that is a key item. A user should never really have to wonder what's the nature of a transaction. And just thinking about removing friction for users and find additional uses of data. So I talked about just a second ago the example of corporate card data and all that transaction. Well, who's interested in expense management? Our accounts payable team, our FP&A team, internal audit. Now tax has an interest, right? So think, who are the different constituencies across your organization that want to work with that data? And so my lessons learned are developing a vision and roadmap, and then keeping that roadmap updated, which is hard. It's a pain to update your roadmaps and think about that, but it also helps you at the end of the year demonstrate successes. I always think about making sure the whole organization benefits on whatever initiative we're working on, and that it's not a treasury project, but it's a company project or a finance project. I never want treasury to be the focus of something. It should be a broader uses, and that requires communication. And then I just think about trying to be consistent, and as I meet with users across our organization, consistent in our messaging and what we're saying. And at the end of the day, you just have to push hard and make something happen. So nothing is easy when there's dozens of demands on your time every day in the treasury space. Kelly and I are a global treasury of 2, and so we have a lot on our plate every day that we're working through. And so, but we have to make something happen every day on these initiatives. So that's kind of the end. I would love questions. If anybody doesn't want to raise their hand now, feel free to come up afterwards. And I would appreciate you taking a few moments to just complete the survey on your phone. The wonders of technology. I know my superiors are going to measure the outcome of my presentation, and they'll decide whether I get to come back next year and talk again. So hopefully I do. So any other questions before we end here? Yes, sir.
You talked about demonstrating success, but also being really busy. To what extent do you quantify the impact of something like the enhancements you make versus just like we have to do this, get it done, and done?
Yeah, so it's a great question. So there's some things you can quantify, so as an example, lowering our bank fees. What did we do to drive lower fees? Or what did we do to we made some changes in our business process to lower idle cash that we got into the investment portfolio sooner, or we made changes in our investment portfolio that increased the yield. Those things are pretty easy, much easier to identify than some of the other soft items. But as an example of a soft item, going back to our corporate card activity, we actually get a file every day from our bank of all of our cards and their balances and various metadata around each card, the user's work email address. We actually bump that up automatically every day against our global HR directory. And the moment HR inputs a termination date for an employee, if they're leaving the company, that will flag on a daily alert that comes out, and we can cancel that card. So as an example, just trying to be proactive. You can't really put an ROI on that, but it's an enhancement of your controls. So, any other questions? Yes, sir.
How were you able to build a network of support within the organization? Because it's only the two of you, so the analytics community, the buy-in, and the support from the rest of the organization.
Sure. Yeah. So we are our key partner in all of this is our finance analytics team, and I just say they love working on these projects because it's a new domain, kind of new area for them. And so they're very interested in seeing, as we talk through use cases and data sources and how we're going to, what we know we want to use for it now, what we may use, how we may use that data down the road. So that's our kind of key partner. But I also make sure that we're engaging with our FP&A group, our internal audit group, our accounting group, our GL reconciliation. So really trying to show how everybody benefits from some of these things. All right, any other questions? Well, thank you everyone for coming. If you have any questions, feel free to email me. Appreciate your time.